Copper's massive rally off March lows stalling. This after the metal hit a two-year high earlier this month. I think we're flat on the week now. Mike McGlone of Bloomberg Intelligence joins us now for today's Futures in Focus. Copper heavily correlated to tech. Talk me through how the market is positioned right now.
Hi, Guy. It's positioned in a very vulnerable way. Copper, to me, is one of the main dominoes I'm worried that will follow crude oil. Crude oil looks like it's peaked. Copper has the highest 52-week correlation to the NASDAQ ever. And that means, well, okay, what really matters for copper now? It used to be supply and demand. Nah, not really. And so I look at copper as very risky. And then you look at things like managed money net positions on copper. They're about the highest they've been in almost 3 years. So I see way over a lot of optimism. And I fear realism is going to kick in and the dominoes might fall. If the NASDAQ doesn't stay higher, copper is more likely to just follow crude oil and go lower.
Hey, so what do you make of that? Because, I mean, we've made a lot about the NASDAQ and its rally due to sort of options trading and the retail guys and Robinhood traders. Is that the case for copper?
No, well, there's fundamental reasons. China's been restocking. There's been supply issues in South America. We've heard these stories before, Alex, and it's just copper's been in a bear market since 2011. So it peaked around $4.50 a pound. It got down to around $2. Right around $3, it looks very dicey and expensive. And it's, you know, if the NASDAQ can keep going, maybe copper will stabilize. But if NASDAQ drops, copper should drop with double the velocity, which is what I'm afraid of.
So let's talk lumber, which is a great thing to do on any day of the week. Lumber futures for November delivery rising 4.7% to 640 spot 4 per 1,000 board feet on the Chicago Mercantile. Basically, limit up. Walk me through what is going on here. Clearly, it is to do with the housing market, huge demand in the United States. Just walk me through the positioning there, because again, this is a fascinating story that gives us a good macroeconomic underlying story. Yeah, lumber's a good indicator, Guy, but it's not really widely traded. It recently peaked around 8,000 board foot, and that to me is just like crude oil and potentially copper. A lot of these commodities, they've bounced. It got to an all-time new high, but the risk is they'll go back to the more enduring trends, which has been down. So lumber's had a massive rally. It's up recently, but I look at it more like it's just not likely to continue up like it has, because supply will come on. And yes, the demand might continue, but remember, we do have pretty high unemployment in this country. We have potential recession.
Right, and then also going to get colder at some point, which is not as good for construction. Just since you're here, let's wrap it out with oil, because you're looking at 2 weekly losses now. For oil, we haven't seen that really since April, when we had that huge sell-off. How are we positioned here in the oil market going into next week's OPEC Plus meeting?
Bearish. Crude oil managed money net positions looks like they've turned lower. I'm going to report on that, on Monday. And the market just looks like it's rolled over around 40, like it did at 70 in 2018. So I'm just got to stick with the trends in crude oil. The long-term trend is down, markets bounce. What's been the enduring trend? Lower. So crude oil, good luck getting going higher. And OPEC needs to sustain those cuts. And we know what happened with OPEC. They usually cannot do that.